Hello, Bin Yang from Xinhua Energy Agency. My question is, do you have a specific data that China need to invest in the energy sector in the period? And how do you look at the current energy policy or strategy of Chinese government? Thank you.
Thank you. Next.
Thanks. David Buchan, freelance journalist. Fatty, just you talked quite a lot about the advance of regulation. Could you just be a little bit more, could you define it a bit more? Because there's some types of regulation that can depress investment, such as retail price controls, but some types, such as subsidies, production subsidies, which can obviously increase it. And in the second question, in the European power sector, which you more or less describe as a bit of a disaster area for new investment, you say that you would like to see a 20% increase in wholesale prices. What would regulate? This is a deregulated area at the moment. Would you like to see regulation, or what would your market reform design be? Thanks.
Okay, and I think there was one right in the way back there.
Thank you, John McGarrity, freelance energy journalist. Just like to get Mr. Birrell's reaction to the EPA proposals you saw in Washington yesterday. Do you think that government's taking these moves to curb coal benefits renewables, or is it more likely to benefit gas? Because your counterparts in the EIA in Washington project that gas will be the main beneficiary when we move away from coal. And do you think that's going to be a problem, that we remain locked into fossil fuels and renewables remains just a small fraction of overall energy generation? Thank you.
So maybe just a few comments, and then of course Fatih will continue with more detailed answer. First, about investments in China. What we can see in China, that there's economic growth and there are environmental policies. These concerns and the growth together will lead to what we expect, a very robust growth of gas demand in China. And we think that will add about 2 Germany's worth of gas consumption to its gas demand this decade. So there is a huge demand for gas. And that means that the recent Russian gas developments and the gas deal will be very important to China to meet the demand, and at the same time, hopefully, to lower the import cost of gas, because the pipeline gas, as Fatih explained, is cheaper than the LNG gas. So we expect that this will reduce China's purchase of LNG, will lead to a more abundant, better diversified, more secure LNG supply for Japan, Korea and Europe, because the LNG can be redirected. So this will be very important. The second thing I would like to say is about the EU. Well, it's something that we have been saying already quite a long time, but now it is also emphasized and underpinned by the investment data. So what should they do? Well, first of all, they should improve demand response through smart grids and real-time pricing and metering. They should expand network connections across Europe. And now we still have a lot of very thin connections, interconnections, for instance, between between Spain and France. And there are others to be mentioned. And then strengthening the EU ETS to ensure clear and stable CO2 price signals. And then use market forces to create the necessary power price signals for investments. And that can be by allowing for adequate price spikes or by establishing capacity mechanisms. But I'm sure Fatih will tell you more about that. And then about the EPA. Well, I think it's important that this signal is there, because it is a signal that it means that by regulation, you can really do something about reductions in power sector emissions. That's the message. And then of course is what's going to happen. Is this going to replace coal by gas, or is it to replace coal by renewables? Well, given the situation in the United States with the very low gas prices, I think it's clear that gas will be that gas will be benefiting a lot from these new regulations. But let's be very clear about something. It is also a very innovative approach. It is an approach that gives states flexibility to manage greenhouse gas reductions across very diverse energy portfolios. So there is more than one answer to your question. Fatih.
Thank you. Now let me start with China. China, to build a power plants, gas, oil, transmission, distribution and pipelines, China need in the next 20 years 5.7 trillion US dollars. And this is the largest sum in the entire world compared to other countries. 5.7 trillion US dollars for that. Now, this is the number. Second, what China is doing is a couple of areas, very good steps in the right direction. First, in terms of the efficiency. Many of us were very interested that the China is building this hydropower dam, making this pipeline agreement with this country, or looking at the shale gas, putting money there. But the main success of China for me is that the very substantial efficiency improvements and keeping the energy demand growth through that under control. And this will continue, we hope, and China will spend 1.6 trillion US dollar for the efficiency improvements, which is definitely very good for China and for the rest of the world. When it comes to renewables, when we look at the next 20 years, China is the champion, will be the champion of building renewable power plants. The renewable contribution from hydropower, solar, wind, when you put all of them together, the renewable coming from China will be larger than US plus all European countries plus Japan put together. So, and finally, perhaps one point on coal. China is making significant efforts to limit the coal consumption growth through regulations. We talk about regulation, which is very good for the local pollution, but at the same time very good for the CO2 emissions growth worldwide. And as such, it should be also put in the same context that the other countries are doing in order to limit the coal consumption growth. David's question on Europe, I think our executive director gave most of the answers, but if I can say only pick up the thing, how this station can be fixed, I think one of the areas is that there may be a need to look at how we can remunerate the reliable supply. And this may be through different mechanisms that the countries may consider. It is up to them. But bringing clarity in the markets, bringing a remuneration for the reliable power would be definitely one of the key options. And one on the EPA. I think today I saw in the newspapers there are very nice charts showing the US CO2 emissions falling down from 2007 to 2012. Unfortunately, they stopped in 2012. Because if you look at the 2013 number, it goes up. After 5 years of a decline, it goes up again in 2013 because of the following. Why this decline happened is the shale gas replaced coal, because the shale gas price or gas prices were lower than coal. This is very good. The Americans went and used a lot of gas. But gas price in 2013 started to creep up close to $5, and as such, coal started to becoming more economic compared to gas. And therefore, we have seen, among other reasons, 2013, the CO2 emissions going up. And when we look at the future, when you look at our gas price assumption in the United States, we see that there may be an upward trend for the US gas prices, and as such, the CO2 decline trend would be in question unless there was a regulation on the coal plants, as we have seen now. Therefore, I think the main implication of this very recent yesterday's decision from the United States is ensuring that the CO2 trends are continuing to go down, and as such, being the second largest polluter of the world, it gives a breathing space to the global climate change efforts. Great.
Thank you. The next three questions. Yes, right here.
Hello, Carsten Herbst, Business Daily Handelsblatt. I have just one question regarding the situation in Germany, where there's a special situation. The government is planning so-called Energiewende. So I would like to know, regarding to what we hear now, is the situation in Germany more dangerous than in other countries in Europe? And is the danger that the lights go out in Germany higher than elsewhere?
Yes, right here at the front. We'll take the two questions. Just a second, please.
Mark Smedley from Energy Intelligence. My question, well, you say in the report that for LNG on page 73 that there's a strong upward pressure on costs. And I'd like to ask whether that you see that exponential rise continuing, or whether you see, particularly for construction costs for plants, whether that could be flattened or even brought down.
And right next.
Hi, Stanley Reed, New York Times. One of the reasons that investment in power in Europe has been low is that in general the balance sheets of the European utilities are pretty weak, and they're just not in a position to finance massive investments anymore. Do you see any alternative sources of financing emerging?
Just on Germany. We looked into the Energiewende more than once, because it's more than once it's used as an example how a country should organize its own electricity and its own energy mix. The point is that Germany is in the middle of Europe. So that means that everything that happens in Germany has its consequences for the rest of Europe as well. Now what we can see in Europe, that is that the cost of Energiewende, they're paid by the consumers. And that's what we mentioned also to Germany. If you really want to continue that, you have to see to it that the balance of costs and benefits, it's not only the cost for the consumers and for some part of the consumers, only those who don't have a solar panel on their roof. So you have to look into that. That's one of the biggest problems they are going to face. And of course, the amount of money that is involved in this, it's not only for 1 year, it's for 20 years to come. So that means that a lot of your GDP is already, well, being spent in the next 20 years. The second thing we mentioned is that Germany, you know, it's a very curious situation there. There is the green hand with a lot of green energy, solar, wind, etc. But most of the people forget about the black hand. And that is because the gas-fired power plants are at this moment, well, many of them are not running anymore because it's too expensive. And what we can see there is that coal and lignite comes back. And that a lot of extra coal and lignite capacity is already online or coming online. So we have to look at both sides of the Energiewende. And the third thing I would like to mention is that it's very important that when we do have a lot of variable energy, that we see to it that these variable renewables are put onto the grid. And that's another challenge for Germany, where the grid integration of the variable renewables, well, it's a lot already, but if you want to have more, you have to look, for instance, into your demand response management and into your interconnection and some other items. So that's what concerns us about the German Energiewende. And of course, if something happens there, it will have its consequences for the rest of Europe, given the fact that, for instance, they use the grids of the neighboring countries to transport their own solar and wind energy. So this is something that really needs to look at the European level as well, not only at the German level.
Thank you, Maria. So, two other questions about LNG. First of all, in general, very general terms, if LNG wants to be competitive, there is a need to bring the cost down, at least to keep it at these levels. LNG is in general and site-specific. In the United States, it is and in Canada, they are less complex and they are the cost is reasonable. But in Australia, we see that it's more complex and the costs are going up. But the question is, we say expensive, cheap. It is compared to what? Today, the main market there are two markets for LNG. One is Europe, but the most important one is in Asia. And in Asia, developing Asia, LNG has to compete with coal. And coal prices in the last 3 years dropped from over $100 to about $75. Very cheap. In the Asian markets, to produce electricity, 1 kilowatt hour of electricity from LNG is 2.2 times more expensive than coal. And if there is no regulation, as we just discussed in the United States, and in most countries there is no regulation per se, of course, those countries go and build coal-fired power plants. Therefore, for the companies, gas companies, it's a must to increase efficiency in their operations, in their cost, to bring the cost of LNG down, and therefore to keep the prices under control, the LNG prices, so that they have a room to compete vis-a-vis coal. Of course, LNG provides many benefits compared to coal, such as the environmental, local, and climate benefits, but coal is substantially cheaper, and I believe in many years to come in Asia, there will be a very harsh competition between coal and LNG to come when it comes to the prices. Now, in Europe, the companies, the large utilities, have major challenges because they are not able to recover the cost because of the prices today. And some companies, utilities, have power plants which were built 1 or 2 years ago, and they are idle, they are not working. But when we look at around, if those companies or the utilities are not able to make the investments, I do not see major other source of finance to go and invest under these existing conditions of the markets in Europe. In Europe, it's a must that the current Europe electricity system should be redesigned. Otherwise, we may well see the lights go off. And this is definitely not a joke.
This will be our last round of questions, so if there are any other questions. Yes.
Yeah, Chris Hobson from Recharge. I wonder if you could comment a little bit on the effects of subsidy on your figures, particularly. I mean, renewables often comes in for a lot of stick. I've just been hearing it yesterday from Euroelectric and a lot of other people. But could you actually talk about the effects of subsidy on some of those figures, particularly US subsidies for fossil fuels, be it coal, be it oil and gas?
Yes.
Tim Colbatch, freelance. You made reference earlier on to carbon capture and storage, and I'm wondering what part you see that playing in investments over the next 20 years with the decline in support for carbon capture and storage from coal companies and the sense that it's just never going to be a viable form of providing cheap energy, and what would be needed to bring carbon capture and storage back into the investment picture.
Well,
Any other questions? Okay.
just a short answer to the CCS question. We are very much concerned about that. We did for the Clean Energy Ministerial the tracking report on what's happening in clean energy development in 2013, 2014. And our conclusion was quite simple. We are not on track. Only thing we are on track with is the deployment of renewables, and that's it. But for the rest, for instance, when you look into CCS and all the other items, we are not on track. It has to do with cost, of course it has to do with cost, and of course it also has to do with regulation. If there is no real regulation to make it, how shall I put it, to see to it that the coal-fired power plants are limited on their CO2 emissions, if that regulation is not there, developments will be stalled on, for instance, CCS. What we do see is two things that are interesting. One is about the using CO2 for enhanced oil recovery. That's a very interesting one, but it's not enough. And the second thing is what is happening in China, not with the CCS, but with the CCUS. How to use CO2 and how to produce less CO2, and then the rest you store. So these kind of developments, they are there, but they are still on a very, very limited scale. But in our projections, in all our projections, CCS is part of the deal. Without CCS, you can forget about it.
Sure. Okay, about subsidies, first of all. Now,
Sorry, forget about the target.
Exactly, forget about the target. Sorry.
About the subsidies, we have today renewable subsidies about 100 billion US dollar. And out of this 100 billion, about 60 billion is in Europe. And this is the main driver of the major penetration of renewable investments in Europe. And but what we see is that some countries are cutting their subsidies in Germany, in Spain. In US, the credits for wind is again stop and go, as Maria just said. So as a result of that, we see that there is uncertainty for the renewables in some cases, and it is the main reason in the last 3 years we have seen renewable investments worldwide to be slowing down, in addition to seeing the cost of solar to come down. Fossil fuel subsidies are more than $500 billion, 550 billion, and they are also providing a encouragement to use fossil fuels, especially in the emerging countries where the demand growth comes from. So these are tools for the governments in order to regulate the markets and to provide signals. Some of them are in the right direction, some of them are in the wrong direction, but it's up to governments to decide. In terms of CCS, I think this is the most important asset protection strategy for the fossil fuel producers. We are seeing signals more and more, as it is the case of the EPA yesterday, that the fossil fuel use may be limited, especially in Paris. We will see, if we see a major agreement coming through, and the CCS can help those fossil fuel companies, their assets to be insured. Otherwise, we calculated in a 2 degrees world, in a climate target world, if you go around those levels, there are about $300 billion US worth of fossil fuel reserves, which may be stranded, underdeveloped, a major point for the fossil fuel suppliers. Thank you.
Thank you very much. If you scheduled an interview in advance with Maria van der Hoeven, please see me after the press conference. We will be doing interviews in the room immediately next door. If you scheduled an interview in advance with Fatih Birol, please see my colleague Timur. Timur, please stand up. Thank you very much.